Sweet. What is going on? We've got Emlyn, Nick, Daryl, Kimberly in here. Got Michael. Two Michaels in. Sweet. Michael, just so you know, I did receive your email. Sorry for the delay in the reply. I'll be replying to that here after the class. Brought us some great questions, so forgive the little delay there. So welcome to class, though. And I should probably start off by going through a little bit of. I'll get into some of our trades from this past week. I got a little decimated based on a little trading error. We used to, on the trading desk, we used to call it a tear, but I'll get into that here in just a second. Let me go ahead and kind of go through the trade that I'm in right now, though. Euro dollar. This is an interesting one to me, actually, because I'll go ahead and expand this chart, and you can see we have the euro up here on pair view on the 1 hour and 5 minute totals, which is what I like to look at for either swing trades or for short-term scalping trades. Just to show you the position I'm in right now, let me kind of show you. I'm right at break even on. I'm short one lot of the Euro USD pair, and it is 1 micro. Yes, good. 114.382. Got my stop in at 114.863. You can see I have my stop right up here at above this swing high, and I have my limit right down in here at 114.001. Essentially risking about 28.1 pips to make 28.1 pips. Thought process behind this trade is very simple. Sometimes, for one thing, the 1 hour totals and the 5 minute totals have been dragged. 1 hour especially. If we can look at total view. You can see we have a list of our usual suspects down here at the bottom. Total view of the last 24 hours. Obviously, I'm going to talk this through with you real quick, because if you know me at all, you know I like to talk about some fundamentals in the class. I got a lot of emails on the euro dollar yesterday. Euro is now down. Usual suspects on the 24 hours is kind of what we like to look for. When we know that we have our list of usual suspects, the euro over the last 24 hours, even with this strong move up, has been heavily bid down now. I'll talk about the fundamentals behind that here in just a second. The Swiss, another one that's in our usual suspects, is now heavily bid after being near the top. You can see a lot of the major currencies are either very strong against euro or very strong versus the Swiss over the last 24 hours. So those are back into being the bullies and the wimps in the schoolyard, if you will. And the charts agree with those statements. And I'm also long dollar Swiss, which I'll talk about that one. I'm got about 50 pips in that trade right now on dollar Swiss. I'll show you. I'll give you a little preview of that one here in a second also. But let me talk about euro dollar real quick, because I find it interesting. Because yesterday, after the German chancellor came out and they expressed optimism over the Greek debt situation, it made the markets over in Germany, the DAX especially, rally. Euro got stronger versus the dollar of upwards of 200 pips based on that news. I actually just got done writing an article, which I'll paste to our notes today for you, for your viewing pleasure for today, on this little move in here. Because whenever these moves happen, oftentimes, whether you're a retail trader, whether you're a professional trader, which I know there's a mix of students in here, markets are driven off of fear and greed and oftentimes panic. And whenever a move like this happens to the upside, what a lot of students will do is they'll email me and say, "Oh, Steve, the euro's going up. Is it time to go long the euro?" My answer to that question is, well, heck no. When we look at the euro really doesn't fool me overall in the long term. We had this period of consolidation right in through here where we obviously had some up and down, and we broke out of this kind of long-term symmetrical triangle that you can see right in here, or wedge pattern to the upside. And it did make a nice little precipitous move to the upside based on that Greek debt crisis optimism, or whatever you want to call it. Looking at it on the long-term time frame, does it look like the euro is recovering long-term? I sometimes have to remind my students in my just regular Forex education courses I sometimes have to remind them that, what is a downtrend? A downtrend is a series of lower highs and lower lows. An uptrend is a series of higher highs and higher lows. Nothing in the markets usually goes straight up, and nothing usually goes straight down. Although looking at this chart, you might say that it does look a heck of a lot like the euro has been going straight down. But what I tend to do as a trader, folks, is I tend to focus in on the bigger picture. What is the bigger picture on the euro? With the optimism over the Greek debt crisis, I can see how that can cause a little dead cat bounce here to the upside on the euro. However, you can see that it's broken down. It made kind of this double top formation. If you take this kind of long shadow out of the equation, it made this double top right at the 115 level. And it had this, this little trough right in the middle of the double top coming down. At that time, the euro started turning right up in here on the 1 hour totals to a -5. So I went ahead and took a sell trade. Which now it's up about 7 pips, so that one's looking pretty good so far, right when it broke through that double top formation. When it comes to focusing on the big picture and why the euro doesn't fool me is the fact that, what did Super Mario do a couple weeks ago? He announced a QE process supplying 60 billion euro to the market essentially each month. We know from history of what happens to currencies whenever they start a long-term plan of any type of a quantitative or monetary easing. The dollar, when it went into QE infinity, it started a long-term trend of dollar weakness versus the majority of the majors. When the Bank of Japan went into that aggressive monetary easing policy, basically supplying trillions of yen to the market, the yen went up 4,000, or the yen went down, I should say. Dollar yen went up, and most of the yen pairs went up well over 4,000 points off of that type of supply to the market. A lot of times, looking at the bigger picture, folks, it has to do with, instead of panicking, just maintain focus. I think we all know that trading takes a lot of focus, and we need to focus in on what we know. And what we do know is that we can make these kind of dead cat bounces based on the Greek debt crisis, but the thing in the back of our heads that I'm always thinking about is the fact that good old-fashioned supply and demand theory. What causes a financial instrument to go down? Supply exceeding demand. What causes it to go up? Demand exceeding supply. Fear and greed. In this case, we know from history of what happens to a currency, and whenever we even look at the long-term trend on the euro, it's QE just started. I mean, QE wasn't going. Speculation of QE, Super Mario trying to talk down the euro during these times, speculation, negative deposit rates, those were all happening during these things. The ECB going into panic mode, if you will, of trying to talk down the euro and trying to stabilize their deflation process. But, overall, you have to look at it as QE just started. And the long-term trend that generally starts based on QE is just the simple supply exceeding demand. I know you're probably thinking, well, that's a long-winded response for a short-term trade, Steve. Well, I just like to always remind my traders to maintain focus. The other trade that I have on right now, let me just kind of go through what trades I have on dollar Swiss. Dollar Swiss, we really like trading into retracements the other day. Dollar Swiss, you can see, also has a lot of buying pressure and a lot of, whether it's the 1 hour or 5 minute totals. I'll show you the trade here on dollar Swiss. If you were paying attention to the retracements on dollar Swiss, what you would have seen is from this swing low to this swing high, we came down and had a little bit of a bounce off the 61.8 level. What I saw coming into this, though, was you saw an A come down. I really like Gartley patterns because they really do give us a nice little formation to buy into dips in the market. When something's in the midst of a longer-term uptrend, how a lot of analysts will come on something like CNBC and say, well, we're bullish on this in underlying assets, so what we're going to do is we're going to focus in on buying the dips. Even though the Gartley is a pattern, it also gives us opportunity to buy into dips. Right down in here, we had a great opportunity at this 78.6 level with an A retracing to 61.8. We had a B come back up, and we had a C come down right here to the 78.6 level. followed almost immediately, or preceded actually, by quite a bit of buying pressure coming up from the market makers right in here, which gave us a nice little buy signal. In fact, I got in almost on the touch of this 78.6 level, which was right at 0.92072, which was about a pip above the 78.6 level, almost to the tick, and it started moving off that right now. Actually, looking at this, about 45 pips in the trade, but dollar Swiss is kind of consolidating. I'm going to keep an eye on this one as we go through class. I should be, at this point, I should have probably taken half my position off at this point, but I'll keep that in mind as we go through. All right, so I'll put that right here in the middle. One thing I will tell you, one of the great things about PitView now is being able to trade directly from it and control all of your chart and control your charts on your MetaTrader. And you can trade directly from it. One thing I want to show you real quick, because this is something that kind of got me into a bit of a trouble the other day, is on dollar Swiss. When you if you go through the instructions to connect your PitView, which I won't go through the details because we do have some some instructions on how to do that. On dollar Swiss, if you go here and if let's say I want to trade dollar Swiss, I just have to click on this little green plus sign here, and it brings up an order ticket, which is connected to my brokerage account. One thing you can do on here, and I welcome you to do it, is on the lot size, if you right click anywhere on the order ticket, you can set defaults. The lot size will default to, I think, 0.10. And since I had a new computer that I had to reload, I forgot to change the defaults. So I went in to do a scalp, not a scalping trade, actually a shorter term trade. Yes, I do still make errors, but instead of putting, you can set your default to like 1 micro lot, which is 0.01. 1 mini lot is 0.10. You can set a default for your stop loss and your pips also in here. Let's say if you want to set a default of like 20 pips and apply it, that's why each and every time it comes up, it'll set your defaults when you put up your order ticket to the lot size you want. I already had this kind of pre in there, but made a mistake the other day of going into a trade and putting in 0.10 instead of 0.01, only lost about 20 to 25 pips on it. However, thinking I only had a micro lot on, I looked at my account and I was down about 25 bucks or well over 20 bucks. So it caused a bit of a drawdown in my account, an error on the trading desk. Again, we used to call that a trade error. So dollar Swiss is another one that I'm long. I'll go through some potential trade opportunities from where we stand right now here in just a little bit. The first one I want to talk about as far as opportunities for today, and then I'll also get into some scalping situations, is one that I'm looking at on the dollar yen. Dollar yen right in through here, and let me zoom in on this chart here in the background. There we go. And let me bring this over because this is going to be one trade that I'm going to be looking at taking today. I actually got whipsawed a little bit out of dollar yen yesterday. It kind of broke through a trend line right up and through here where I was a buyer, and I had my stop right down below this low, and it came down and barely stopped me out. And then the markets had that huge rally yesterday in dollar yen, which trades a lot off of risk off, which is stocks up, yen down, stocks down, yen up. Then it came up and would have hit my max profit. I still like, when we look at dollar yen over the long term, I still like the idea of buying yen. You see how sideways it's been over the last several weeks here. You see how this little sideways little trend that it's had over the last several weeks, to where it's really been almost kind of mirrors a lot of the stock market action that's been happening over the last several weeks. Markets up, markets down, markets up, markets down. Slightly down, for the last several months. But I still like the opportunity to buy it when it gets into the lower end of that range. The yen is one that I really like the idea of trading it both ways. When it gets to the upper part of the range, looking for opportunities to go short, and when it gets to the bottom part of the range, looking out for opportunities to go long. You can see the yen right up in here. it's kind of mixed when it comes to any type of buy or sell and balances, if you will. But it's also making a nice little formation in here where, again, I'm a big fan of the Gartley pattern. I'm a big support and resistance trader. I love the opportunity of buying into dips. And this is almost a perfect one that's setting up for us. This is what we call an A. The A, kind of the basic rules for a Gartley pattern is you need the A to retrace, the impulse move of A to retrace to approximately 61.8% of what we call X, which is the impulse, what we call an impulse move, which it did, ended right at about. That's the thing about trading, a little bit of discretion, about 61.8. You need B to retrace and end between 38.2 and 88.6% of A, which it has. And then when you get what we call a C correction coming down to the 78.6 level, the 78.6 is what we would call our trigger zone or our trigger level. So what I'm looking to do here, and we can use the pair view as a confirmation on this, is I'm looking for, if the yen comes down to this 78.6 level, I am looking to be a buyer in this range. If it comes down here, I think that would give us a nice little entry for a high risk reward scenario. You see, the other reason why we like retracement, folks, is the fact that we like the opportunity to get in on trades where if we do buy here, and this will be our entry, our buy entry, when it hits the 78.6 level, and +5 on the 1 hour totals can be used for confirmation. So you can almost put that in here, 117.106. So when it gets down to like the ask being at about 117.136, that could give you an opportunity to buy it. Let me decrease the font size just a little bit on this so that I can put that in there. And then our stop, this is what we like, is our stop would be right below this low at 116.857. And then this also provides us an opportunity whenever we're able to get in on these levels. One of the reasons why we like this is because our risk here is going to be, you see the risk is, if we're wrong by a little bit. I mean, this, depending on where your entry is, you'd only have about, 30 pips as far as your risk goes. So, the thing about Fibonacci retracements, or any type of retracement of getting into the, or a Gartley pattern, is that you're risking a little if you're wrong as far as the number of pips go, but if you're right, you have a naturally higher risk-reward ratio. So this always gives us an opportunity to scale out of our trades. What that means is if I'll generally do, because this is a tracking account, I'll generally do like 2 micros on this. I'll do a limit 1 at 1-to-1 risk-reward, meaning based on my entry. Based on my entry and putting my stop at 116.857, whatever the difference in pips is, I'll take off half my position at a 1-to-1 risk-reward ratio. And then limit 2, I'll look for a larger amount of reward to give us that naturally higher risk-reward ratio, which we always like, putting up a small amount of risk and making a large amount of profit back. In this case, limit 2 would be, I always kind of put a standard limit 2 in when we start the process of what we call meat trading, of putting my second limit. I'll draw my Fibonacci retracements from the swing high to the actual entry level. And I don't want to have the dollar yen break through a ceiling to get me a higher risk reward. Meat trading means that we're just trying to get the meat of the move, the in-between move. So I'll go from the high to the actual 78.6 level itself, and limit 2 would be right here at 117.797. That's usually an initial second profit level for me, because you know I don't want it to have to break through a ceiling. So what this means is when it does hit a 1-to-1 risk reward, you take off half your position, you move your stop to break even at the very minimum break even, so that you erase the risk on the second half of your position, the second lot, and then you let the second lot roll up to get you a higher reward potential. It's a great way to scale out because you can lock in some profit, and if you're right and then it comes back down and stops you out, you know, you still lock in a profit and you erase your risk on the trade. Scaling out is always a great way of having risk or of managing risk and also managing profits on a trade. All right, so I'm going to go in here, click new, put this up here. And this will be part of our trading scenario for today. So we'll be looking at that one as a potential swing trade for today. And here I'm just going to scroll down here and put this at the bottom of our list here, so we can go through some of these other trading scenarios, so I can review some of the trades from this week. It's kind of a hit and miss week so far. I guess not every week can be like last week where we had a huge amount of profits. So swing strategy, bullish Gartley on dollar yen on the 1 hour time frame. There we go. All right. So going through some trades from, that's one trade that we'll be looking for. So we'll keep an eye on dollar yen over here on the right-hand side of our screen. We'll keep an eye on that as it starts to come down. We'll also, of course, euro dollar is our existing trade that we had open here at the beginning of class. So I'm going to be looking at that also. Dollar Swiss, also in on that. Kind of in a state of consolidation right now. But let's also review some of our trades from this past week. Let me kind of just scroll up here. I added this one, buying an inverted head and shoulders break on the pound dollar. It had a nice little reversal pattern forming. Now, when you're looking at these, it actually turned into more of a double bottom formation, and I'll show you what this looks like. You don't have to, you can go directly to the pound dollar chart just by going up here and saying, okay, let's go to pound dollar. And I'll expand that. And let me zoom out just a little bit. Here was the inverted head and shoulders right in here. It really wouldn't have changed the way you trade it, because it didn't break this inverted head and shoulders. It didn't break the neckline. It continued down based on dollar strength. And you can see right down in here, it made another bottom, to where it went from kind of being an inverted head and shoulders pattern to being a double bottom formation on the pound. And you still had that neckline in play right in through here. We talked about this both on Monday, and we talked about it yesterday in class. And this is when the dollar was really selling off throughout yesterday, where we did have a strong little close here above that double bottom formation. I don't know if a lot of students got in on this one because a lot of times people will shy away from trades like this based on the risk on the swing trades, because putting your stop, you want to put your stop where you're wrong, which is right down below the bottom, and look for a 1-to-1 risk reward, which would have easily been reached right up in here, good for about a little over 100 pips. Based on your entry and your stop, about 115 pips would have been your take profit level. Unfortunately, I didn't get in on that yesterday. I was one of the people that didn't get in on that, even though I recommended the trade. I didn't get in on the pound dollar. I don't know why I did that, but sometimes you get the elevator, sometimes you get the shaft, but it was good for a nice little move up. You would have had to have some patience on that little swing trade, but it would have hit your max profit. So good job. I know a couple of you had sent me emails saying, hey, nice call on the pound dollar. I envy you because I don't know why. I got a little, I was in a couple of trades yesterday, mainly dollar Swiss. I had gotten in yesterday on that Gartley trade, so I was already up on it. And so maybe it was me being a little bit more risk averse, but that would have been a good trade. Pound dollar is kind of following the euro and the Swiss today with a little bit of selling pressure coming in on the pound. We may come back to this one, but if you made that 100 pips or so off that trade, pocket that for right now. No need to kind of double down on any type of position. All right, let's go back to our trades here. The scalping strategies, we had dollar-yen scalping strategy, we had a euro-dollar scalp strategy. Dollar Swiss, we were looking to buy into retracements, and we also had a swing strategy on euro-dollar to sell into the retracements as it came back up. Obviously, that probably wouldn't have worked out too much in our favor. I never got in on anything on the euro dollar for the last couple of days. In fact, this position right in here was probably my first position. I want to talk a little bit about the scalping strategies here. In fact, let me pull up euro dollar here. We are in our retracements. Oh, that's the one that got stopped out during class. Yes, we did go into euro dollar. I'm sorry, on the swing strategy, we got stopped out during class on that one when it came back out. My apologies. I forgot about that. That got stopped out. Dollar Swiss, the buying into the retracements, into the retracement zone, that's the Gartley trade that I just got into, of buying into retracements. That was the Gartley trade that I had gotten into, which that one's still looking good. And then, of course, we have our scalp strategies from the other day, where during class we had 2 successful scalp trades on dollar Swiss, each for 16 pips. So we were able to capture about plus 32 pips during class on Monday. So it was a nice little scalping class. I want to make some notes here on these scalping strategies that we've been going over, because I know they've been great, very popular, of just some things I've been noticing when it comes to the scalping strategy that we have, and then we'll go into how to implement this strategy today. So notes on the scalping strategy of some things that I've noticed. Lately, when we first started implementing this strategy, you have to remember this was when we first started implementing it, it was right during the time of a lot of volatility hitting the market, based on Super Mario announcing QE, based on the Swiss National Bank unfixing their exchange rate to the euro, based on the Swiss National Bank going to a negative interest rate. And so we had a large amount of liquidity and volatility hitting the market for several weeks, which caused a huge amount of successful scalps in the market, because it seemed like liquidity and volatility was pumped in the market almost on a 24-hour basis, to where we had strong moves to the upside and to the downside. Now, in normal trading days, if I'm doing an active trading, what I've been noticing is volatility has been drying up after 12 p.m. Eastern time. Now, the significance of 12 p.m. Eastern time is that at 3 a.m., you can almost call it 2 a.m., but 3 a.m. Eastern, we have the London session open. And then at 8 a.m. Eastern, we have the U.S. session open. And then from 8 a.m. to 12 p.m., that's what we call a crossover session, when we have both the afternoon of the London and European markets in play, and then we have the morning of the U.S. session in play. Now, normally on active trading strategies, and I haven't discussed this up until this, for like scalping strategies, I haven't really discussed this up until this point because, even in the afternoon and going into the London session, into the Asian session, New Zealand session, or the Sydney session as we call it, normally we've been having extreme amounts of volatility. However, what I've been seeing and what I've been noticing is that was great for several weeks, but one thing I've seen is that once it reaches about 12 p.m. Eastern time, I've been seeing, and this is kind of normal for the market, is volatility and liquidity has been drying up a bit. Lack of participants, if you will. Now, remember what PitView does. PitView is measuring market maker activity, and generally speaking, the more participants and more market makers and liquidity providers involved in providing liquidity to the market, the better PitView is, because the more people, the better the larger number of participants, then the better the buy and sell imbalances, or the higher the probability they're going to be, because they're measuring such a larger amount of liquidity. To put it into simple terms, PitView, because it measures liquidity and liquidity providers, or measures liquidity providers, I should say, the more liquidity, the better. So here's my point: is that from until further notice, what I would say is on the scalping strategy, only take trades from 3 a.m. to 12 p.m. Eastern. And this has been the way I've done it for quite some time. This used to be kind of a normalcy to me, to where I would never, unless it was a swing trade where I was gonna hold it for several days. I would certainly never, when it reached noon of the U.S. session, unless it's a trade that I'm looking longer term, I wouldn't be really counting on the market to make large moves up or down from the opening, from the closing of the London session, the afternoon of the U.S. session, which is 12 p.m. Till 3 a.m. And mainly that's because in the afternoon here, when it gets to be 5 o'clock, when we have Sydney and the Asian, I'm not a big trader of the Sydney session or the Asian session, because that's what most adults are doing here in the U.S. if they have kids, is that's family time. That's when I'm off work, if you will. So if you are trading like the Sydney session, like 5 p.m., and going into the Asian session, probably you'd want to focus more. If you are trading from 5 p.m. to 3 a.m., you may want to just focus on Aussie, New Zealand, and JPY pairs. That would be kind of my advice to people. But certainly between 12 p.m. and 5 p.m., I would certainly not be taking as scalping trades. And my apologies for that just being laid out on you. And you may be saying, well, why are you switching the strategy now? Well, strategy should be rule-based, and sometimes we get spoiled. And the last several weeks we have been very spoiled when it comes to volatility, because volatility has been just a constant. But when we're struggling in an hour or a 2-hour period to get 12 pip moves or 15 pip moves either direction on pairs like the euro and the pound and the Swiss, then that's telling us that it's kind of lessening what I like to call the probability of profitability. We try to, this is a term that I always use in my education classes, we try to focus on probability of profitability. Meaning, if we're going to ask the market to make moves that give us even the smallest amount of pips, we want there to be a probability that it can hit in either direction. And I haven't been seeing that as of late. And let's change the time on this to today, which today is February 4th. Okay. All right, so let's go around the horn a little bit more on some other strategies. The dollar Swiss scalping strategy, by the way, I'm going to keep this on here because I still believe that that gives us some opportunity here on dollar Swiss. So on dollar Swiss, we're going to keep our strategy the same, to where I do believe that you can take trades in either direction, if you will. So keep the dollar Swiss strategy the same. You know, when it goes, right now I'm in a long-term position, by the way, so I'm not. I'm already in a long position, which still looks good for the long term. But as you see it, like right now, it goes to a plus 20. Take your buy and sell trades on the 5-minute time frame. Here, let me switch it over to 5 minutes. Take your buy and sell trades on the 5-minute time frame. I'm going to keep everything the same. You know, you can take buys or take sells at plus 20 or minus 20 on the 5-minute totals. Trade it in either direction. This number right in here is extremely confusing to people. And what I tend to look at, and let me bring up an order screen. You see the spread on dollar Swiss here. The spread has really calmed down since volatility's gone down a bit on dollar Swiss. Okay. What I mean by that is, if we looked at dollar Swiss and the spread, if we looked at this a week and a half ago, 2 weeks ago, because the Swiss was so volatile, the spread would get up to upwards of 4.5, 5 pips. So in this case, you can see it even now as it becomes more volatile. You can see the spread. It gets upwards of, you know, it's moving, but it, you know, like right there, it just clicked with like 4.3 pips. When you're getting into a trade, you want to base your max profit and your minimum profit and loss amount on the spread that you pay getting in. So right now, the spread, let's just take it right now, the spread is, let's say, 3.3 pips. What I would do is I would round it up to 4. And I multiply, I always round up. If it's 3.1, if it's 3.2, I'll round up to 4 pips, and I'll multiply that number by 4. And that'll give me, you know, 16 pips. And that's one of my rules for scalping, is never to let the cost exceed 25% of my profit or loss potential on a trade. Because what that does is it increases your probability of being stopped out premature to market movement if you have your stop too tight. Now, the only thing that you may want to consider changing here on dollar Swiss is that consistently, and it has gone upwards of 3 to 4 on here. I'm going to keep it at 16 pips, but when you look at your average spread amount when you get into the trade, if your average spread, let's say, is 2.8, you know, when you get into the trade, or 2.6, well, then round it up to 3, and you can put your minimum stop or profit level 12 pips. So this is all based on your spread, folks. It's just based on the cost associated with your trade. If you have a very small spread on your platform of like 1.2 or 0.6 pips, and you pay a commission on top, you want to take all of that into the equation. So that I'm going to keep that the same, to where I do feel that you can look for that scenario to take place today, of taking trades in either direction on dollar Swiss, on scalping it today. So we'll keep that on there as far as that trading strategy. Dollar Swiss also, let me bring up one other thing on here. Let me go to an hourly time frame. You know, if you're looking for more of swing trading opportunities on dollar Swiss, and you know, I am already in down here at these lows, and I will be watching any type of turn in here to potentially take some profits, because I don't want to give back. I definitely don't want to give back, you know, 50 pips to the market and let it go against me. So I'll be watching it close. But I'm looking more at the 1 hour totals here, which have been steadily increasing, and the fact that the Swiss has been kind of dogged by the market makers in the last 24 hours. So in this state of consolidation that it's in right now, like right now, if you're looking at this, if it goes negative 20, if you're on a scalping strategy and it goes negative 20, one thing you also might want to consider is it's breaking out into a kind of a new low right in here. So, you know, if you put your stop just 1 pip above the high, that would be about 16 pips. If this goes negative 20, you can potentially look for a sell trade, a 16 pip move to the downside. Like it just went negative 22. If you went short on this right now, you do have some potential for a trade there right now, of risking 16 to make 16. I can't do that because I'm already long a position, and I can't be I used to call it, I can't be short against the box. I will see long term what this does, though. If the 1 hour totals start to make a drastic turn, I might get out of my position, and we'll check back on that. There'll be some discretion involved there, but that's certainly given a sell signal from a scalping standpoint. And then our euro dollar is doing very well right now. We're very close to hitting max profit on that. We'll have to see what happens with that. That's an existing open trade right now also. Let me switch gears here. Let's see. I am in euro dollar. I'm not in dollar yen yet. So let me kind of switch things around in here. We'll keep an eye on dollar yen. I really do like if that comes down to 78.6. The question that came up is, Steve, do we have to take them in either direction? Can we go off of kind of your view of it going up? That brings up an interesting point. If you are scalping, you see how I have the 1 hour totals on here. When I say either direction, I mean that because it is trading kind of at the midpoint of its range, that it does have room to go up and it has room to go down if you're looking for short-term plays on this. If you are looking to kind of, if you're a little bit more risk averse to doing, extreme amounts of short-term trades, you can always go in the direction of the 1 hour totals. Now, what do I mean by this? I mean that, of course, I'm long right now. I want dollar Swiss to go up. Okay? So if you wanted to focus in on just taking buy trades, if you wanted to wait and see, okay, well, if this goes to a plus 20, I'll look for opportunities to buy it to the upside. That's perfectly acceptable. That'll be a perfectly acceptable scenario. And Phil just brought up New Zealand. We'll talk about that one too. We'll get to that one too. All right, so let's also take a look at, here we'll just go to New Zealand real quick. New Zealand brings up some interesting scenarios right in through here. Pull that up on a 1 hour time frame. New Zealand, this came from Phil just now as far as buying into a lonely bar break. Actually, Phil, are you looking at this trend line in through here, which it's not the strongest looking trend line for selling opportunities on New Zealand? For an opportunity to go short. New Zealand had a pretty interesting evening, actually, because Graham Wheeler, the head of the Reserve Bank of New Zealand, he was actually downright, he was pretty aggressive in his stance on New Zealand with Aussie lowering their interest rate. Aussie lowered their interest rate to a to 2.25%. Sorry, I'm kind of tripping over my words here this morning. And last week with the New Zealand interest rate decision, Graham Wheeler was kind of offset-ish. We may lower rates, we may raise rates, who knows. Last night after their employment report, Graham Wheeler gave a speech to where he was almost defiant in his stance on New Zealand. Instead of saying, hey, we may lower rates, we may raise rates, he actually made a case for not lowering interest rates in New Zealand, which obviously caused this to have a little spike down and then come back to the upside. So if looking at opportunities to go short on New Zealand right now, especially with this nice little run-up that New Zealand had of about 300 pips, and it kind of being supported by fundamentals, I would say if you're looking for something, you see on New Zealand, and here, let me check the total view on this too, because I didn't check New Zealand. It was up near the top for a while. It's probably selling off a bit on the 24-hour totals, and it is. Just a little bit. It's selling off on the 1 hour totals. It's still weak against yen, dollar, Swiss, and Aussie. But the Swiss and the euro are kind of what's causing a lot of these imbalances right now, the Swiss and the euro being both kind of amongst our dogs today. And Aussie's actually been showing a bit of strength here this morning, even after their interest rates being lowered this week. New Zealand is one to where, Phil, I might, instead of looking for a lonely bar break to the downside, I might actually, because it's been a little bit stronger, I might actually take this trend line off. And if I was looking for anything on New Zealand right now, I may actually look more towards taking a break of this trend line to the downside. If we can get the 1 hour totals come up, because it has an immense amount of, it's had a lot of buying pressure over the last 24 hours, over the last hour, over the last 5 minutes. So on New Zealand, I think that would give you an opportunity here if you wanted to take a break above this trend line and look for like a +5. You don't even have to look for a lonely bar. A lonely bar is when it breaks a trend line and a candle or a bar is completely detached from a trend line. It's standing all on its own. I would almost look at opportunities on that to go long from a swing trading standpoint. So that's more the case of what I look at on New Zealand, Phil. But that's a good one to bring up. But the defiance of Graham Wheeler last night. The defiance of, I'm always a fundamental, I love technicals, I love fundamentals. I love technicals because I love trading off of price action. But I also love fundamentals because I think fundamentals are the fun part of the market. It's like watching Days of Our Lives or a soap opera, because a lot of people don't like fundamentals, but I do. I think it's the fun part of analyzing the market is kind of looking at some of these central bankers, Super Mario, Janet Yellen, and all these guys when they come out and talk. And I definitely took Graham Wheeler's comments last night to be much more hawkish than the market was expecting, and the market did react off of that. All right, let me go to our good friend here, the dollar Canadian here also. This is because I believe this is an interesting one from a scalping standpoint. And I'm going to go to I'll go to a 5-minute chart on it. It's been kind of consolidating in through here today, but the dollar Canadian has been making some pretty sustained moves up and down when it's been breaking through into highs and lows. Looking at this you see right in through here, we have this little bit of consolidation occurring right now on dollar Canadian. Dollar Canadian, I think, is a good scalping candidate today, actually, because it has been making big moves up and big moves down whenever it's been breaking out through either support levels or through resistance levels. In fact, I wouldn't call this a horizontal support level. I would almost call this right in here. This is what I'd probably be looking at. Here, I'll delete that. Kind of be looking at this as kind of a shorter term trend line on the 5-minute chart, and it's breaking up here into these highs. Dollar CAD, I think, is a nice little scalping candidate today, actually, of if we wanted to take buys and sells in either direction. But one thing I would warn on dollar Canadian is a lot of times the buy and sell imbalances can be very sporadic up and down when it's in a period of consolidation. So what I would look for is, if you're going to take buys and sells, is wait for some type of break out of this consolidation. You could call this almost an ascending triangle, if you will, that's forming right in through here. But on dollar Canadian, this is another one I like today to take buys or sells in either direction. Off plus 20 or minus 20 on the 5-minute totals. But I'm going to put a note below this. if you do get into like a plus 20 or minus 20 on this, it's one of the other things that when you're looking at market makers and you're looking at buy and sell imbalances, this is something that can kind of, it's the same thing with any other indicator like stochastic or MACD or moving average crossovers. When you look at technical indicators, which I don't really consider PitView to be a technical indicator, it's more of a, it's kind of a standalone indicator. There's really nothing like it as far as what it's measuring, because it's measuring just the market maker activity. But when things are in these types of consolidation right in through here, you can often get a lot of whipsaws up and down as far as, you know, market makers coming in and putting buy imbalances on and sell imbalances on as it's in these periods of consolidation. And this can really apply to any currency pair that we trade. So if you are going to take buys and sells, I would be hesitant to take any buys and sells. If it goes to a plus 20, I would look to take your buys only if you see it breaking through this resistance level. No, it doesn't have to be clear as far as a lonely bar. Like right now, if this went to a plus 20 on dollar Canadian, Tom, that's a good point. Since we're scalping, since this is more of a short-term strategy, like right now you see how green this bar is and it's breaking up into this high. If this went to a plus 20 right now, I would say, hell yeah, let's do it. So that's what I mean by make sure it's clear. Whenever we're looking at short-term strategies, we don't necessarily have to look for, you know, the confirmation that we do in a swing trading strategy of like a lonely bar or a close above a certain level. I just want to make sure if this goes to plus 20 that I am breaking through a high. So like right now it's questionable, but when it's kind of going green up here to the top of the candlestick, you know, even right now I would consider it clear. You know, so if that candle is gaining some type of clearance, that's what I would look for, and it's real time clearance. I guess that's what I should say. You look for real time clearance of those levels, and I would still keep your resistance level kind of right in through here. Now the minimum stop, you know, again, looking at dollar Canadian, this one has a very tight spread of like 2 pips. So on this one, we don't have to, you know, on the minimum stop profit level, I usually go for a minimum of 10 pips. You can go 8 if you'd like, but the minimum stop and profit level on this, I would say make it 8 or 10 pips. Or 10, I'm going to put 10 pips on this. Now, your other option on here, whenever we say, or you can use swing highs and lows, okay? We just want to make sure that, let's say if it breaks through this high, we probably want to put our stop right below this little swing low right through here, you know, if it breaks into a new high, which that would be risking about 20 pips to make 20 pips. So keep that in mind. You know, I generally might take the greater of, as long as it's not a huge amount of pips. If I go down to a swing low, and let's say this low price right in here is 1.24762. Well, if it's breaking through this high and I get in at like 1.24948 or something like this, if I get a buy, I'll go ahead and just put my stop below this low and look for 1-to-1 risk reward. So, you know, look at your swing highs and lows too, but we just want to make sure that the minimum clearance that we have for our stop and take profit levels is at least, and I'm going to put 10 pips on there because that's usually what I'll look for as a minimum. So limit of 1-to-1 risk reward. And the alternative exit is the opposing signal. So the alternative exit, the opposing signal, plus 20 for sells, minus 20 for buys. Now what that means is if you get a plus 20 and you take a buy trade on a scalp, if it gives us some clearance here above these highs, then we're going to certainly get out if this 5-minute total goes to a negative 20. So that will be that's one thing that I do like for a scalp today. We're going to trade us some loonie. In case you're wondering what that means, loonie is kind of the other name for the Canadian. Let's see, ISM numbers coming out in 10 minutes. Got it. We'll take a look at that. All right. Gotta bring this down. And we're kind of going to mirror this so we can copy and paste it. Only we're going to change this to 10 pips. And we'll keep an eye on that. These other ones in here, I'm going to go ahead and let's see here. Retracements on euro. I'm already short the euro right now. Let's see here. I'm going to refresh this page. What are you doing, Mr. Manufacturing Number? $56.7. That should be strong for the dollar. That should be very strong for the dollar. Came in at a little bit above expectations at 56.7, which obviously is showing some strength here. Let's look at our other charts. Yeah, definitely strong for the dollar here. Dollar CAD's coming up. Let me check our dollar Swiss chart. Here, I'm going to move, check dollar Swiss right in here real quick. Bring that up. That came up quite a bit here. Dollar Swiss is a, I mean, I would call that number kind of being more in line with expectations, but you can see dollar Swiss is giving you a nice little plus 20 on the 5-minute totals. That could be cause for a buy right now on your scalping strategy. You could even put your stop right below this swing low and potentially look for a 1-to-1 risk reward. Forgive my my fib levels are right there, but yeah, we had a nice spike up, nice spike down here on the euro dollar. Came out in line with expectations, so let's see here. Sorry, sometimes I just get looking at the markets, if you will. Let me. I'm going to change some of these charts around a little bit because I want to be able to look at dollar Canadian too, because I do like that one. Let's see here. Where are my trades at? I'm up 24 pips on euro dollar. I'm still up about 55 pips on dollar Swiss. Still have that one in. Let me go to my market watch. I'll change that to $CAD over there, just to have this over here. Wow, that's really taken off there on $CAD. Really not a whole lot on the totals here as far as showing any type of real significant buy and sell imbalances. That's a little surprising considering this move on $CAD. So that's a little surprising. So obviously the news, these moves that it's made on most of these pairs, other than this right in here, which has been about a 50 pip move so far on dollar Canadian, but dollar Swiss and euro dollar haven't moved really significantly, only like 10 pips since that news was announced. So we haven't had a huge amount of significant news, but obviously the Canadian is really liking that that manufacturing number. So dollar versus CAD is doing very well. Let me change that to a 5-minute chart. This is what we were looking at here. So this has clearance in here. So keep an eye on that 5-minute total though, because right after news, the worst thing that you want to happen is right after a news event, you don't want to get whipsawed in and out of dollar Canadian over in here, off it coming up abruptly off a news event and then potentially retracing. So that's one of the things I use the 5-minute totals on. If this goes to a negative 20, feel free to short it if it's coming up to the upper part of that range. So it's two ways to look at the dollar Canadian today. All right, so euro dollar, I didn't write this one in our notes because this is the one that, if you remember correctly, when we started class, I was right at break even on this. So if that's why I showed you that trade first, of where I had my stop and take profit in. So I'm still holding on to euro dollar. Got about 23 pips in that trade right now. I'm still long dollar Swiss right now off of and this is my long-term trade, this longer-term swing trade for the Gartley pattern here. One thing I probably do need to do, though, on dollar Swiss is I probably need to go ahead and take off one of my lots. To show you how scaling out works, I was hoping to be able to do this during class because I get questions on this. I've already reached well above a 1-to-1 risk reward on dollar Swiss. So what I'm going to do is I'm going to double click on the price. I'm going to go ahead and close out one of my lots. The way I do that under volume is I go to 0.01, click on close. Bam. It's like the hammer being dropped, baby. And that leaves me one lot left on dollar Swiss. I know it's going to a negative imbalance now. So it's dollar Swiss again is this one of the reasons why I'm in kind of a longer term swing trade on this. So what I'll do now is, you see my opening price is at 0.92072. I'm going to put my stop loss, or change my stop loss to be my break even point. And my take profit level on dollar Swiss, let me go in and show you what that is. Let me go ahead and modify this order. There we go. My take profit on dollar Swiss, let me show you what that is. Going from this swing high to this swing low. My second take profit point I'm putting right up here at 0.93105. Whoops. So 0.93105. And this is the actual trade itself. So 0.93105. Do. There we go. So what does this mean? It means I've captured 50 pips on one lot. I'm still long. I'll still keep looking at dollar Swiss. You know, this is another one that's in this consolidation. You know, you look at the 1 hour chart and it's sitting right in the midst of this little consolidation right in through here. And it's been consolidating for quite some time. This is one of the other dangers when it's trading in the midst of these consolidation levels of trading, you know, on just, you know, those scalping of plus 20 and minus 20, although it's going to a negative 50 right in through here now. But, you know, I'm still willing, you know, I'm looking at the 1 hour totals. If I see this go One thing that might shake me out of this trade before it gets down to before I let it stop me out at my entry, if you will, at break even, is I'll watch this 1 hour total, okay? And there's a lot of discretion involved sometimes in swing trades, especially when you're doing multiple lots or scaling out of a trade. If I see the 1 hour totals go to a -5 and it starts to come down and break this trend line, I might go ahead and take whatever profit I have in the trade off the table, and then probably just go back into scalping once again. So if you are in a scalp trade right now and short on dollar Swiss, you probably have your stop about 16 pips away, right up here at the 0.9, somewhere up in here. Either that or you have a little bit of a profit in there. But I am not short, I am long. So, but I did say you can take trades in either direction on that one. Dollar Canadian still hanging in there. Euro dollar still hanging almost right near our take profit levels. We got about 20 pips as a class thus far today. I'm going to stick with those two as far as dollar Swiss and dollar Canadian. The only one that I didn't mention today was my good friend the euro dollar. And on the euro dollar right in here, again, I am short. I have a short-term trade. I'm short right down in here. If you want to take the same scalping system, if you are scalping, let's say the euro dollar as opposed to like dollar Swiss, what I would say is you can do I would say you could do trades on the euro dollar in either direction if you would like today. The reason why is because when you look at what it's done the last several hours, you know, it's right in here. It's right in between its high and low for the day. So if it does retrace back up, if you want to take a short-term scalp trade to the upside, that's another one to where you could probably look for a minimum of 10 pips up or down. So you can look at this one as far as scalping trades if you'd like on euro dollar in either direction also. I won't write that out, but same thing as dollar Swiss, only you look for your minimum top profit and stop points at about 10 pips away. The question just came up, Steve, why aren't you getting out of your full position on dollar Swiss when the 5-minute total is showing such an extreme amount? I don't let short-term indicators dictate a long-term trade. That's why. If you're trading off a 1 hour chart, you trade off 1 hour indicators, a minimum. That's your trigger indicator, if you will. So the question being, why don't I exit this if you see the 5-minute totals going so negative? Folks, one kind of rule of trading is you don't let a short-term indicator dictate a long-term trade. If you're trading off a daily chart, you probably don't want your signals to get in and out. If you're looking to hold a trade for a month, you probably don't want to be using a 1-minute MACD, because it's going to get you in and out if you're looking to hold for a longer period of time. I'll let the 1 hour total dictate of whether I get out, but then again, what I'll do is if it goes to a -5, if it starts coming down below this, I might move my stop to be below this level right down in here. But I don't let short-term indicators dictate my long-term trades. That's kind of a rule for trading. You know, I placed that trade off a 1 hour chart, and I would have been in and out of that trade 20 to 30 fold probably in the last 24 hours if I let this 5-minute total scare me out of it. So, and plus Swiss and Euro have both been dogs as of late. So as far as trades go, I will add the article I wrote this morning. Actually, I'll keep this euro dollar on here. Actually, buys or sells on -20 or +20 on 5-minute totals. Euro dollar, you could, again, a lot of the spreads have tamed down in the last couple weeks. And I'll copy and paste that article I wrote to this also. And don't forget, we're not doing dollar yen. We already have a strategy we're going to stick with our swing trading strategy on dollar yen. This was the profitable trade we had on pound dollar. And here's our bullish Gartley on dollar yen. So that'll just about do it for our strategies for today. Got euro dollar on there. There's dollar CAD. There's our dollar Swiss scalp strategy. I'm already long dollar Swiss on a swing trading trade. So we'll hold in a holding pattern right there. Okie dokie. That is all I got, folks. Bader, I'm sorry I didn't get around to your question, buddy. Let's see, you were looking at Euro Aussie. It's coming down the lower end of the channel. Oh yeah, it did come down lower end. And what did I say yesterday, Bader? I said I favor the short on the Euro Aussie right up in here. I would favor the short side. So, hey, I don't want to say anything, but just kidding. All right. Dollar Swiss, this is what I was talking about right in here. You see how the 1 hour total has gone to a -5? See, the 5 minute total is going negative on here. This is a situation where I might move my stop. My stop's right down in here. I might move my stop to be right below this trend line. That way I at least capture it. I don't necessarily want to exit out at a -5, but I've already got 50 pips of profit in this trade. It's gone -5 on the 1 hour totals. So now that's the situation I was talking about. Now that the 1 hour totals have gone -5, I'm not necessarily going to exit out of dollar Swiss, but I am going to move my stop up to be right beneath this trend line. That way, worst case scenario is total on this trade, I'll pick up a total of about 70 pips, which I'm perfectly happy with. I'm perfectly happy with taking 70 pips off that trade and then looking for further opportunities. One thing that you do see, though, when you look at this on dollar Swiss, this looks a lot like that Canadian dollar, to where this has that same type of consolidation right in through here. As it's coming off the top and the bottom of these of this little channel right in through here. We have those lines drawn on the 1 hour chart. But that's one that I'm still going to stay in, but I'm just going to move my stop up to capture a little bit of profit if it does happen to come down. All right, I need to go ahead and stop the recording. I want to thank everybody for coming in today. Let me check some of our, right before we leave, let me just check the other two trades that we had. Let's see, we were short on euro dollar. That's coming back up a little bit. Still showing negative in the 1 hour total, so I'm gonna stick with that for now. Let's see, dollar yen is another one we were looking at. Still looking, if dollar yen does come down, still looking to buy this at that 78.6. That's a swing trading strategy, so you'll have to exercise some patience there on dollar yen. And then, of course, dollar Canadian. See, dollar Canadian. I don't know if it's gone -20 yet, but dollar Canadian is showing a nice little, see those tweezers there at the top? If that goes -20, that could potentially give you a nice little sell trade on dollar Canadian. I don't know if the 5 minute totals have gone there yet. It doesn't look like they have, but see those little tweezers there at the top? Extended move up after the manufacturing. If it goes -20, that would be a great news retracement trade right in there. I would like to see the market makers confirm that, though. So if 5 minute totals go negative on dollar Canadian, go ahead and put your stop right up above these highs right up in here. and look to go short. That is looking really good right now, but I'm not gonna do it yet, but we'll wait and see on that one. All right, I do need to stop the recording though, because I'm running out of time majorly. So I'm gonna go ahead and stop the recording, folks.